at Binance, our mission is to support the freedom of money globally. That's something that we're extremely passionate about, right? So people should have the freedom of how they want to use money, where they want to use money, how they wish to store their money, etc. The stablecoin market capitalization from beginning of last year to beginning of this year went up by more than 50%. If you look at transaction volume, it went up by more than 70%.
That's right.
And I always get this question to say that, how do you reconcile the fact that Binance is a centralized outfit,
Right.
while blockchain and crypto is meant to be decentralized,
Right.
permissionless,
Yes.
and trust.
Welcome to another episode of Onchain Capital, where we cover the latest in regards to Web3 and AI innovation and the power shift between East and West. Today, we're going to unpack it all with my guest, co-CEO of Binance, Richard Teng. Richard, thank you so much for coming, and thank you for being in Hong Kong.
Thanks for having me, Sean. It's great to be back in this lovely city again.
Actually, the weather really participated. When we were scheduling this, I had already this room in mind, and I wanted to really take advantage of the fantastic view that we have of the Hong Kong skyline.
Harbor view and stuff.
Yeah, that's right. So it's really wonderful that we have this opportunity to do so. Now, I know you travel a lot, and obviously you work a lot with regulators. And for those that know about your background, you really came on from behind the table from a licensing regulation perspective, and now being a regulated entity on the other side. So maybe share a little bit about kind of your journey of how you came about doing that, MAS, ADGM, and then obviously now the co-CEO of Binance.
Well, so I started my career with the Central Bank of Singapore,
Yes.
MAS, in 1994, spent 13 years there, then went to Singapore Exchange, became the Chief Regulatory Officer, spent 7 years there.
Right.
And then was headhunted to Abu Dhabi to head up
Yes.
Abu Dhabi Global Market Financial Services.
Really at the time as well.
I was the first CEO. So when I was there, it was basically greenfield, right?
Right.
So we have to formulate all the different rules and requirements to really license, regulate banks, securities firms, insurance companies. And now if you look at ADGM, it's a thriving international financial hub in a short 11 years. So I was a CEO for 6 years. I decided to step down in 2021. I have a chance meeting with CZ
Yes.
in Singapore right about June of 2021.
Okay.
And we had a long discussion. And after that, he invited me to join Binance, right? But my exposure to blockchain and crypto was in 2017.
Oh, that's really early then.
It is pretty early. So I attend this event called the Futures Industry Association meeting, which is a big powwow every year around March in Boca Raton. And that particular, it's normally attended by global regulators and global exchanges, right? So the likes of New York Stock Exchange, NASDAQ, all the different commodities exchange, CMEIs, etc. And then you have the US regulators, the Hong Kong regulators, Japanese, Singapore. But that edition will stand out to me because I started to see a lot of crypto players coming through. And the more I speak to them, the more I'm fascinated by this industry and blockchain and what it represents. Because by now I've been involved in financial services for more than 3 decades.
Right.
But since day one, both the central banks as well as financial institutions all talk about financial inclusion in a very big fashion. But even today, you have 1.4 billion people around the world that's financially excluded from the banking system, right? The banks make it extremely costly to bank any individuals in many parts of the world. So the more that I deep dive into that area, the more I think it can solve a lot of pain points that we have in financial services.
Yes.
And at ADGM, we became one of the first regulators in the world to then formulate a framework to start regulating crypto. Because my thesis is very simple. At that point in time, crypto adoption was less than 1%. I said, look, for this to go to masses and for the benefits to be enjoyed by many more people, you need two things to come into play. First thing, you need clear regulations.
Yes, clarity is very important.
Clarity is extremely important. So for the first 3 to 5% adoption, the early adopters in any technology, so to say, they don't need all those clarity because they are believers. But for people that are less informed, they would like to see clarity on regulations. They would like to see what sort of provisions are there to protect them in terms of trust. So that thing has to come into play. So, which is why that's part of our effort at ADGM to say we want to formulate clear rules so that industry players know what are the parameters they have to operate within and give them space to grow. Second thing I noticed then is that this asset class, unlike any other asset class, which always starts from institutional investors, go down to corporates, go down to high net worth, and then finally retail gets it.
Right.
This came out, the Bitcoin manifesto came out right after the financial
crisis. That's right. Yeah.
And at that point in time, people lose faith in the financial system. People want it disintermediated. People want it permissionless, trustless, etc. And it has been embraced by retail for the longest time, with none of the other part of the value chain embracing it. They say, institutions say it's a passing fad. Corporates say that, you'll go away. Regulators are not spending time on this. So for the institutions to come through, which is extremely important part of the ecosystem, because without the institutions, you witness several cycles by now.
That's right.
Every cycle, the peak and trough is going to be very stuck. There's going to be a lot of volatility because you have one-dimensional clientele, so to say, which is
retail is typically herd mentality.
Absolutely, right? So you need the smart money, you need the long-term duration money in this sector to provide a different category of investment thesis, duration, holding power, and much the longer duration in terms of timeline and outlook, right? So for them to come true, again, you need clear regulations, right? So on that front, it's something virtuous that we need to create. So, and I do think that those two conditions, after spending a number of years within the sector, those two conditions came about in 2024. With the first ETF being approved by the US.
Yes, that's right.
And then last year, you have the Genius Act on stablecoin being approved. So the momentum since then has grown a lot because then, for example, once the Genius Act is approved, you see a lot of financial institutions, a lot of corporates starting to embrace stablecoin.
That's right.
Because there's certainty now.
Yes.
So the stablecoin market capitalization from beginning of last year to beginning of this year went up by more than 50%. If you look at transaction volume, it went up by more than 70%.
That's right.
And if you look at transaction volume of stablecoin last year, it actually exceeded the transaction volume of Visa payment globally. So you can see that pace of growth coming through. And hopefully, Clarity Act will have the same effect globally, right? Because US being the largest economic power with the largest GDP and the deepest capital markets. When the US say that, I want to be the crypto capital of the world, I want to be the AI capital of the world, President Trump is extremely strategic in the economic sense to say that these two fundamental technology will enable the rebuilding of every economic sector going forward, right? So if you look at financial services, if you build a new bank or securities firm today, you're not built based on the current infrastructure.
No.
If you look at the SWIFT network,
that's right,
it's decades old. If you look at corresponding banking, it's so inefficient, take 2 to 3 days.
Even SWIFT is now trying to integrate themselves into the crypto rails.
Absolutely. Right? So they are now experimenting on-chain. Right?
That's right.
They see the beauty of it. If you do a fund transfer cross-border today, it takes 2 to 3 days for the recipient to receive the funds.
Right.
It takes very high cost, right? There's a lot of value extraction by financial institutions. But if you do it on-chain, via either crypto or stablecoin.
Happens in seconds.
Instantaneous seconds, right? Fraction of the cost.
Yeah.
Which is why you do see a movement even among corporate treasuries, right? That manage huge amount of funds. They need to move funds across borders quickly to their vendors, to their subsidiaries, moving from Australia to Europe or to the US, right? Now utilizing blockchain technology. Because from a corporate standpoint, you need to hold much less capital.
Right.
There's high level of capital efficiency and velocity because you have certainty when those money is going to arrive, right? So you need to hold much less capital. You pay much less fees. You retain a lot of the value on that front. So we do continue to see a big movement on the different fronts, whether it's stablecoin, whether it's RWA, all those big utility is going to come through in a big way. So I'm very excited.
So you've talked about financial inclusion, and I think a lot of us that have spent a number of years in Web3, we've always heard about financial inclusion. We think about the next billion user. And for the longest time, it was still very crypto native, right? Yes, we have DeFi and we have a variety of different applications and NFTs which was almost 2 cycles now, if you think about it. So now it seems like we are finally at that stage where we have certainty around stablecoin, so a payment and settlement vehicle. And we have now tokenized securities that are now around all around. A few episodes ago, I had the opportunity to interview Kraken. And they've got their X stock portfolio out. And they were actually in Hong Kong. I met with Mark Greenberg, and he was in Hong Kong actually thinking about whether there's possibility to tokenize some of the A shares, right, in Hong Kong. So making it really accessible, not only US stocks to now, to the emerging market, but also taking the East, right, and bringing it out to the West as well. So very, very interesting in that regard. So do you actually see now we have the regulations in place, we have the products in place, and we have the institutions in place to actually now take it now to the next billion user?
Absolutely. So I would just go from a broad perspective and then what we are doing, right? So if you look at a broad perspective, once stablecoin is getting so much traction, actually the banks are looking at it from a competitive angle as well, right? So you mentioned Swift is trying to experiment on-chain. But if you look at banks, they are starting to experiment with tokenized deposits as well, right? So if you start to put all these things on-chain, the clearing and settlement part, the transfer part, get significantly reduced in terms of timing and cost, right? So the banks realize all this competition is coming their way. If you don't react, you'll be forced upon them, and it's going to be quite painful, and they'll be disrupted. So you see that. Similarly for assets. So you look at both NASDAQ and New York Stock Exchange, both have announced they're going to put their stocks on-chain. To be traded on a 23/5 basis, right?
Who could have thought, right? Even 3 years ago, 5 years ago, who could have thought?
Absolutely. So if you look at that, it's also a reaction to competition. So I can highlight some of the instances, right? So for example, crypto and blockchain always trade 24/7 from day one, right? And by trading 24/7, it's for institutions and corporates and even for retail, it facilitates round the clock taking of positions, hedging of risk, which is very significant because if you look at liquidity risk, if you can't hedge your position or take new position at night, off trading hours, or during the weekends when events are happening around the world,
or a single tweet,
that
can change the market, right?
Information is flowing. It has impact on global asset prices, whether it's precious metals, whether it's petrochemicals, whether it's stocks and bonds, right? Then you're not effectively managing risk. And with the advent of agentic trading and programs, right? Trading is going to move to 24/7 basis like you're not. And if you don't allow for that proper hedging of risk, you are going to be at disadvantage, right? So, for example, on Binance Run, we have introduced precious metals contracts in January. Within a short span of 3 months, we have surpassed quite a lot of the domestic commodities exchange volume.
Talk about timing.
Talk about timing. And then we introduced petrochemicals a couple of weeks back. Again, very good support from the institutions because they realize they need to manage the risk on a global basis on a 24/7 basis. Same for corporates. So you're seeing all those trends coming through. You're seeing it. So we offer stocks as well that you mentioned. We offer pre-IPO exposure. So the global trading game is going to be quite different. So with more than 310 million users now, we are a financial super app. We are creating an ecosystem for our users to trade all these different asset class. So we are going to be multi-jurisdictional, multi-asset class global platform that facilitate users in terms of all their investment needs instead of just focusing on crypto. And our aspiration is to reach 3 billion users.
3 billion? 1 billion? 3 billion.
We have raised that, we want to be ambitious on that front.
Of course.
So we want it to be an everyday super app for users on that front. And you can see all those coming through. And that include investments very heavily into the compliance and regulated arena, right? So we are now regulated in more than 20 over countries. But we are the first one globally to have a home regulator, so to say, in the form of ADGM, Financial Services Regulatory Authority. So none of the global exchanges can lay claim to that, right? Because FSRA regulates us on an end-to-end basis. So from user onboarding, KYC, KYB, transaction monitoring, market surveillance, to our risk management, listings, governance, and the core wallet management.
And it's global.
And it's global.
It's global remit.
So they regulate our global liquidity as well.
Oh,
right?
I see.
So it is a very comprehensive framework. And we took more than a year to do many different walkthroughs with them to demonstrate our systems, how we do things, what are the safeguards, give them assurance that we're doing it the right way, change some of the operations to meet the standards that they impose, etc. But we are glad that we have that, right? So that gives a badge that we are very serious about what we do in terms of user protection, in terms of proper regulations and safety and safeguards. And bearing in mind that many countries around the world still do not have proper regulations around crypto, that gives our users, wherever they are, that assurance that there's a global standard that applies to us, and that give assurance to users that they're protected in terms of trust and safety.
It's very interesting at the tail end of what you just mentioned, the word trust, right? Trust has always been important for financial markets.
Yes.
But I recall when I first got into this industry, and I was the CEO of Algorand, a layer 1 blockchain. And I remember my dad. My dad is an engineer.
Okay.
And my dad says, "Son, what are you doing now?" So I'm like, "I'm running a blockchain infrastructure." And he's like, "Tell me about this infrastructure." So I give him all the spew about trustless, decentralized, right? The trilemma, essentially. And he looked at me, he says, "So you're talking about financial assets that's going to be running on a trustless infrastructure.
Yes.
How can I trust a trustless infrastructure?"
Yes.
Now, remember, he's an engineer.
Yes.
He understands, maybe not to the degree of a blockchain engineer in terms of smart contract, but he understands technology.
Yes.
And I've always struggled mentally between this word trustless technology and trust in terms of the offering and the legal liability of the products that a particular platform, a particular enterprise is issuing. And what you're mentioning here now is really diverging both of those concepts, right? Decentralized technology from a protocol level, but then a trust factor, a trust layer surrounding the whole thing, leveraging regulation and cybersecurities and everything else around it.
That's right. So if you think about it, the infrastructure layer is decentralized.
Yeah.
It's meant not to rely on any single counterparty. So
it's like the internet in a sense, right? All of us can get access to the internet.
So that is the infrastructure layer. But at Binance, our mission is to support the freedom of money globally. That's something that we're extremely passionate about, right? So people should have the freedom of how they want to use money, where they want to use money, how they wish to store their money, etc. And that's something that we have always been pushing, right? And I always get this question to say that, how do you reconcile the fact that Binance is a centralized outfit,
right?
While blockchain and crypto is meant to be decentralized, permissionless, and trustless, right? And my response has been that it is not inconsistent because the infrastructure layer is decentralized, and the fact that it's decentralized allows you to do many things, unlike traditional finance, right? So, for example, today, if you hold a stock with a stock exchange, and you want to withdraw that and go put it into your wallet, I can assure you, it'll take you a lot of hurdles.
Yes.
You need to go and find another central depository to transfer your shares, and they will take weeks, right? If not, I suspect it's not days anymore. I suspect it's weeks if you transfer from...
You almost have to go all the way back. I remember the very first stock that I owned, it was still in a piece of paper.
Yeah, that's right.
Right? So
it's
you have to go
basis. That's right. Then now it has stripless, it's in a depository. So you actually can't withdraw it. You have to transfer it to somebody else to save for it, right? So that is the infrastructure that we have built in the traditional finance sense, right? But if you look at blockchain infrastructure, if you hold a stablecoin or token, you can deposit it into an exchange. You can withdraw it on an instantaneous basis and store it in your core wallet. You can transfer it. You have that freedom of how you choose to make use of the money and not being encumbered by all this infrastructure layer and intermediaries layer that really impose a huge cost and huge burden for anybody that just want to lay claim on their proper assets, right? So we are there to really support the entire movement on that front. Because if you look at it, regardless of the form, whether it's a centralized exchange, decentralized, people have that freedom to move money as and when they want to, right? In a responsible fashion.
That's right, of course.
So that is something that we facilitate. And unlike decentralized platform, the centralized platform create a lot more trust because, look, all the users are properly KYC, KYP. We interface with regulators. We work with law enforcement agencies to fight illicit crime. One of the common problems in blockchain is users sometimes transfer on the wrong chain. They are not so familiar with Web3. Right?
Yes.
They don't know they need to hold certain tokens for gas purposes.
Yes.
And if they lose it because they do not know in the decentralized platform, there's no way you're getting back those. Right?
That's right.
But on decentralized platform, our customer service officer and our tracking team do their utmost to help people, recover their tokens. Right? So there's a lot of safety net in place to really assist and help users via a centralized platform. Right? And we custodize their assets. And a lot of people that do not know how to properly custodize their assets lose it because, you lose access to our private keys, etc. So we do a lot of those services for users to really protect them. And actually, a lot of rules and regulations have not caught up, or do not impose certain requirements on us. For example, we are the first exchange to come up with what we call a safe asset for user fund. Acronym is SAFU fund. So we set aside $1 billion.
I see.
And none of the regulators prescribe that, right? But we say that we want to protect our users' interests. So in the event of a breach in terms of security, right? That fund stands ready to compensate our users. But we have invested heavily into this area of risk management, into areas of security, because it can never be understated how important those things are. I see a lot of fast developing exchange that are growing very quickly, under investing in those areas. And then once you have an event of a security breach, they lose a lot of money and, their clients have no recovery mechanism, right? I've seen exchanges fail because
you see incidents on a weekly basis.
That's right. Yeah. So I cannot stress that exchanges and protocols have to invest a lot into security measure to really protect users. And many of them do not really focus enough on some of these areas. They just focus on growth without looking at the risk areas, right? Which is just as important as the growth areas.
Speaking just like someone that spends so much time in the traditional financial services industry, risk management is always number one.
Absolutely.
Right? You always think about risk first before you roll anything.
That's right.
And as a regulator, you also think the same way.
That's right.
Right?
Yeah.
So I think maybe in the beginning part of the Web3 journey, and to be honest, it's still relatively short.
It is
in comparison to the rest of the industry.
Yes.
So there's so much innovation, so many new things being pushed out. Risk was always there, but it might not have been number one.
Yes.
But now that we have matured enough to this phase, it cannot be overlooked, right? Risk management across all fronts has to be considered. Now, I do have to ask you one question though. If you think about Binance, the history of Binance, right? From the kind of nowhere status to now obviously regulated in multiple jurisdictions, having a home jurisdiction as well, as you mentioned, through ADGM. And now offering not only crypto trading services, but you also have payments and you have other forms of kind of tokenized assets, real RWAs and so on. Then if we map back to traditional finance, okay, you think about things like Glass-Steagall Act, right, from 1933. Right. And you think about Dodd-Frank.
Yes.
You think about the segregation of duties and also product segmentation because of past incidents that have happened. Do you think that will apply towards the digital asset industry? Because you are now, and it's not only Binance, but obviously you are leading the charge. You now offer products across the board.
Yes.
Are you seeing the same kind of potential pressure coming from regulators to say, hey, you know what? Maybe a single company should not be doing all that.
Well, so if you think about it, we have the beauty of blockchain, right? Where everything can be verified, which the traditional finance space doesn't have it.
That's right.
So if you look at exchanges around the world, if you look at Western exchanges, they are more horizontal structure, right? So you have different parts that's being broken up. But if you look at most of the Eastern exchanges, right, whether it's in Hong Kong, Singapore, etc., they are all vertically integrated. If you think about it, in the sense that, you know, most of them have they own the exchanges, they own the clearinghouse, etc. So they are actually, if you look at the form of it, they are actually vertically integrated exchange. They just hold under different entities. That's all, right? So similarly, our ADGM setup is like that, right? So we have our exchange operations that's held by one entity that's licensed by the ADGM under recognized investment exchange regime. And then we have our clearinghouse, so to say, recognized under recognized clearinghouse regime. And we actually also have a broker-dealer license in ADGM. So we have formulated ourselves in the format that traditional regulators can understand how it operates, right? But unlike traditional finance, blockchain is on atomic settlement. So a lot of times when I speak to regulators and regulators that have not spent enough time and energy in this space,
they don't quite understand.
Right? So I mean, if you look at traditional exchange setup, you have the market exchange, and then you have your broker dealers. The broker dealers are in charge of onboarding clients, right? The clients is not directly onboarded by the exchange.
That's right. They're the front line.
And they'll feed into the exchange, right? And then you have a concept of clearinghouse, and then you have clearing members. And then in the event of default, you have the clearing members trying to recover from the clients. If they can't, they try to pull together to co-share risk before it hit the clearinghouse in terms of the financial waterfall and stuff like that. But in crypto, when we first started off, we don't have the luxury of any of those things, right? So we onboarded client directly onto our platform. We do KYC on our own. So you have disintermediated the broker dealer. And because you have disintermediated the broker dealer, you enable 24/7 trading via blockchain and crypto. One of the reasons why NASDAQ and NYSE is only moving to 23.5 is because the broker dealers have not caught up with this technology, and they need 1 hour to do that.
And that's an important segment.
That's an important segment.
They cannot ignore them.
They cannot, they are important stakeholders in the value chain. They don't work on weekends, right? So they are helped by that and sort of infrastructure setup, which is based on old technology. But if you look at new technology, you don't have to set it up that way. And then if you look at traditional clearing, it takes 2T plus 2T plus 3 settlement, right? There's no settlement finality until 2 or 3 days later. Whereas in crypto, it's cleared and settled instantaneously. So you reduce the clearing and settlement risk instantaneously, right? So if you look at things like clearing fund, it is on a totally different magnitude because you don't incur the same type of clearing risk as traditional exchanges do. If the trade is not settled by one client, and it has a snowball effect down the road. So it takes a lot to try to understand how this technology works and how the infrastructure is set up and how it minimizes risk, so that, and everything can be traced on chain. If you do a transfer, people can see where the money is going to, right? To make sure that the same sort of abuses and challenges that's faced by some of these traditional setup does not confront crypto, right? So because it's set up very, very different.
So maybe the last question, Richard. You're here in Hong Kong, and I shared with you earlier, my show, a lot of times I try to contrast and compare the East and the West.
Yes.
And obviously during the Biden administration, there was a lot of hostility towards crypto. And the Trump administration obviously has been very progressive in that regard. You talk about the Genius Act. Hopefully very soon, the Clarity Act will have some clarity in terms of moving forward. But the US obviously is the 800-pound gorilla. When it moves, the whole world moves.
Yes.
But then in Asia here especially, and also in the Middle East, many jurisdictions have had clear regulation for quite some time.
Yes.
Japan, Hong Kong, Singapore, right? So do you see the kind of transition back into the US where US sets the rule and the rest of the world follow? Or do you think because of the leadway that many jurisdictions have already had, that they will actually have their own point of view? And there may be some similarities, but also some divergence from how things are being regulated between the East and the West?
I would say that if you look at within financial services, in every sector of financial services, there tends to be harmonization of standards across the globe, right? So if you look at banking, there's Basel standards that all the banks have to adhere to. If you look at securities and commodity space, right, it's pretty much ISO standards that apply across. And the standards across jurisdiction doesn't deviate much. Crypto is not that. So you have crypto is still trying to find, a common global regulator that promulgate that global standard, right? So we are not there yet. We wish for greater clarity because as a global platform, when you have a single standards,
right, then it's much easier
so much easier
yes,
to operate. Because now today, every time we get a new local license, we have to really tweak our operations, the way to work, the reporting standards, etc. The risk management standards, they're totally different from jurisdiction to jurisdiction. So it has become sort of very administrative burdensome in terms of complying and global expansion, as you can imagine. So what we wish for, the end game, is global standards that allow for us to really operate with one standard across the globe, right? Which is what the banks and the securities firm are familiar with and asset management firms are familiar with. We don't have that yet. We do think that over time, the US will play an outsized role in
of
that,
course,
right?
as they always have.
As they always have, right? Being the largest capital market in the world, largest GDP, whatever the US does, the rest of the world will be then forced to react. Not only from a regulatory benchmarking area, but from a competitive area.
Right.
Because, US has certain natural advantages by being the largest economy.
Yes.
And if you don't react, and you don't meet what the US is doing, or even surpass what the US is doing, your own competitive advantage will be diminished. So that is what is in the room now because there's no global standards. So places like Hong Kong, Singapore, Dubai, Abu Dhabi have the advantage of being very nimble in terms of policy making because it's much smaller jurisdiction.
Yes.
It's much faster to move. So you can formulate rules and regulation much faster, and you can formulate best practices much faster compared to larger countries where you have many more stakeholders to consider. So I do think that some of these fast-moving jurisdictions will always have a competitive edge in a sector like this if they do it in the right fashion, right? You mentioned clear rules, but clear rules is just one dimension of it. You can have clear rules, but you administer it in a very conservative manner.
That's right. That's right.
Which is what we have seen in some jurisdictions. They set out clear rules.
Yes. But initially, it's so strict.
Initially, they are very loose, and then subsequently, they become very, very strict, right? And then you see a mass exodus of firms from those jurisdictions. Or you can start off by being very, very stringent, and then subsequently say, hey, I have enough experience, I learned enough of it now, and then I now welcome a lot more because I understand this sector a lot. And they take off in a different form, right? So it's always the administration and the execution that matters other than rulemaking. Rulemaking is just one facet of it, but it's also the other parts of it that's extremely important. And whether you have the right people in the right places to administer those rules, right? Because you can have hidden practices. I'm an ex-regulator, so I can tell you.
Of course.
We have written rules and we have hidden practices, right? So, no, this is what I think you should do.
Yes.
Right? And regulated firms have no choice but to comply with that. So how it continues to develop really depends on the attitude of many of the regulators and policymakers towards this newer sector and their understanding. The deeper the understanding, the faster they will embrace this technology and the faster the ecosystem will grow within that ecosystem.
I have seen many regulators over the last few years, and I would say amongst all of them, pretty much all of them, the amount of education that they have done internally and also engaging with the industry, it has been tremendous.
Absolutely.
Right. Just a few years ago, I remember just explaining what a smart contract was.
Yes.
And I mean, I can see how puzzled they looked, right? And you talk about atomic settlement.
Yes.
And like, well, who's the counterparty? Where's the escrow?
Absolutely.
Right?
Yeah.
So we're asking a lot about that. And now those questions are no longer in place. Now they're investigating, reserve management. They're looking at things like DeFi regulations and what layer of the DeFi stack do you actually need to put rules in place. So I am personally very pleased to see the acceleration of the understanding and thereby rulemaking.
Yes.
And I think that's only going to be very helpful for the entire industry.
Absolutely.
Yeah. Yes. Richard, thank you so much for coming on the show. You've shared so much insight with all of us, not only your incredible journey, but of course, running the largest crypto institution now in the world, and having this very point of view about different jurisdictional differences, but then also similarities in terms of pushing the industry forward. So thank you again for coming on the show. Really lovely to have you here.
Thank you for having me. It's lovely to be here.
Richard, thank you
so much.
All right.
Thank you.